average projection has been about a 1% decline over the course of 2024 for most banks, which hasn't significantly changed even into January of this year. But again, it'll be interesting to see how that plays out and what impact that will have on the marketplace.
Well, with the year 2024 already well underway and a lot of things going on, the big question mark that we have to ask ourselves is, what are the big things that will influence interest rates throughout the year? It's going to help us make better financial decisions, but it'll also help us to understand what the consumer mentality might be around the real estate market. There's a lot of factors that could impact interest rates and mortgages. We can't highlight every single one of them in this video, so what we did is we picked out the 5 factors that are going to be the most impactful for mortgage rates going into 2024, and we broke down what this all means. Now, you're going to want to stay tuned because towards the end of the video, we talk about our thoughts and feelings on the real estate market, but more specifically, what the big one is, which could impact the market moving forward. Now, I'm going to start off with something really juicy and unsurprisingly, the number one consideration as far as interest rates straight away. We are in an interesting time of the real estate market where inflation is a number one driver of conversations, and it has a big impact on mortgage rates moving forward. Now, that's our number one factor which will impact mortgage rates and interest rates, the real estate market, going into the rest of 2024. And before I get into the conversation, I'm Alex McFadyen at Flow Mortgage Co. If you please do so, make sure to hit that like, that subscribe. You and me and my dog and everybody else would be stoked to see you join along with all the rest of the videos here. If you're liking it, leave a comment below just so we know that you're enjoying the conversation. And of course, I like to interact, so please ask any questions as we move our way forward. So number one is Canada disinflating right now. We are facing a variety of different hurdles when it comes to the inflation market in Canada, and there are so many different things going on from so many different directions that we're dealing with right now. However, the number one factor of inflation is a real consideration. Now, the most recent reports that came out as of December of 2023 showed that inflation numbers were slightly down from previous months. However, a high portion of inflation was actually related to rent, mortgage, and real estate costs. So those two factors when it comes to rising rates and overall rental and mortgage housing costs are actually working hand in hand. Now, we all know that the Bank of Canada is trying to get overall core inflation under 2%. We're still sitting in the 3% range here at the end of 2023, beginning of 2024. But that is the number one factor that is going to dictate what the BOC does throughout the rest of this year. And on our list, it is the number one consideration that's on everyone's mind. Honestly, I can't remember a time historically, and doing this since 2011, where people ever talked about inflation on a daily, weekly, or even monthly basis as it pertained to the real estate market. It is a real thing, and it is the number one factor on our list of what's going to actually impact mortgage rates this year and moving forward. Number two, we call this credit spreads. Let's simplify this a little bit more. There are what we call bank credit spreads. For the sake of our conversation, what we're referring to is the cost of money, the cost between the borrower, in this case the bank, and the lender, and you. So there are spreads, which is the amount of profit which is being made by the bank. And of course, if they are providing you loans, then there are certain amounts of discounts that they're willing to provide or not provide based on their desire to make a certain amount of money. Now, those credit spreads are tightening right now, which will have an impact on where mortgage rates will go as the banks continue to be more flexible and more open to the possibility of lending out more money. You'll see that interest rates themselves will start declining as they put a little bit less pressure on the overall spreads and mortgage interest rates. Now, when rates come down from the BOC, their borrowing costs will also come back down, which will impact what you will end up paying in the long run. Ultimately, this is the end of the 5.5%, 6% GIC rates. We've already seen that end in the winter, and you're probably going to see that start to work its way back down, which is obviously a good sign as it pertains to mortgage interest rates as well. Number three, and this one cannot be understated, market volatility. What do we actually mean by market volatility? Well, the economic surprises and rebounds are anticipated. In fact, we've already seen this in the beginning of the year with US employment numbers up and Canadian employment numbers static, but actually down because we lost more full-time jobs. The market volatility is going to impact what happens in interest rates this year. The big question mark there is how much volatility do we see and how sharply does the market react to these different types of situations when they actually happen. Now, we already saw what happened really quickly at the end of 2023 where the bond yields were dipping like no tomorrow, in fact down 1.25% over the course of 6 weeks. But of course, all of these considerations and what could happen, economically speaking, will have a continued effect on the marketplace going into 2024. Now, this is another reason why we believe it's not going to be a straight line down, but in fact, we're going to see a bumpy ride down when it comes to interest rates throughout the course of 2024. Number 4, competition in the marketplace. 2023 was a year that Scotiabank at the beginning of the year basically walked away from the mortgage market and said, we don't want to have anything to do with it, which is a big deal because they're one of the major players, especially in the broker channel. This allowed a greater level of entry from lenders like TD and others, but what it also did is it reduced the amount of competition, which is never a good thing as a consumer, because ultimately it meant that interest rates were being buoyed up as opposed to being anchored down by some of those lenders. Now, we anticipate competition to start to grow, and we've already actually seen that with banks offering greater discounts behind the scenes, not advertised to certain consumers, and they are fighting tooth and nail for every piece of business. We're also, interestingly enough, noticing the banks are losing a lot of that business because consumers are getting sick and tired of the rate game where they have to go get a rate, come back, and play that. In fact, on our side, our clients are telling us straight away they want to commit to us and they're not going to do that. And we're seeing people stay true because they're just sick of that back and forth game. That being said, the rate competition externally will grow, which will impact overall interest rates. In fact, we see the biggest competition likely to be in the insured mortgage space, which is those for less than 20% down or under $1 million with less than a 25-year amortization. And we're seeing most of the quote unquote online lenders actually vie for most of this type of money more than anything else out there. So that competition could bring rates down a little bit, and we will look forward to seeing what happens in that spring hot market, which is typically the time of year which interest rates are most competitive. Now, further on, we've got our last big one, but a couple bonuses that we want to talk about. And that big one is what we call the cyclical tendencies of the overall market. So historical trends suggest a rate cut could be declining. As we talked about here, a declining rate cut could happen in the year 2024 from the BOC. We're looking at the timeline here and suggesting that the first rate increase was in 2022. We're now moving on to 2 years, which is typically the end of a certain cycle that we see interest rates stay as they are, at least at the peak. Now, that would indicate that we'll start to see interest rates come back down, but of course, it's difficult to say exactly when and how much. I mean, most projections, the average projection has been about a 1% decline over the course of 2024 for most banks, which hasn't significantly changed even into January of this year. But again, it'll be interesting to see how that plays out and what impact that will have on the marketplace. No doubt, even though fixed rates have come down 1%, the average consumer is not paying attention to that, but they are paying attention to what the BOC does. And we do believe that at that time, when they start to drop rates, is when we will see a lot more activity in the real estate market. So overall, what other dynamics could be at play here? The first one is speculation. We will start to see the market speculate on where rates will go, which will have a direct impact on number 2, which is the real estate market dynamics. One of the biggest things that could impact any of these timelines will be what actually happens in the real estate market in Canada. Do things pick up like they did in March of 2023? Do we see a major bounce back? If we do, chances are very good that we'll probably end up seeing interest rates hold steady for a period of time. So that would be the second one. And the third one is just overall how consumers react to the higher borrowing power and where that comes in the marketplace. Ultimately, as we've talked about in the past, if interest rates come down by 1%, that represents about an 8 to 10% increase in borrowing power. And of course, that means people can borrow more money, which means house prices are going to go back up. We don't have any more supply than we had in the past, and that's going to continue to be a major issue in the real estate market, no matter what anyone says. So that's our projections on the 5 things that's going to impact interest rates going into 2024. If you disagree, agree, you like it, you don't like it, let me know in the comments below. I'd love to see it. Of course, if you like more of this information, you want to go a little deeper, check out the podcast too, which we play on the channel and on Spotify. Of course, guys, we'll see you next time. Thanks so much for watching.